Hi everybody, welcome back to another Tax Tuesday. My name's Christopher Reagan. I'm the founder of Halon Tax, and today we're going to be talking about business entities and tax structures. And this is something I've written blogs about this. I have done several videos about this. It is a really big deal, and if there is a Tax Tuesday that I think you're going to really get something out of if you are new or if you're not really sure about what the different tax structures are or what the different kind of business entities are, this video is for you because we are going to dive into it. We're going to make sure that we're thinking about these things correctly, and we're going to make sure that really at the end of the day, you never have to say to someone again, oh, I can't ever remember how these things work, they're confusing, or I can never remember which tax the LLC gets, that kind of thing. We're going to dive into all of this in some detail, but the kind of detail that as a bookkeeper, I think you need. We're not going to dive into it like you're going to prepare the taxes or something. So let's jump in. So this may go, kind of without saying. As bookkeepers, we really need to understand how our client is taxed and the implications of how they are taxed and their tax structure. It's super important to assist your clients in helping even make these decisions, because I can tell you as the person they go to maybe weekly, if not monthly, whereas the tax preparer is someone they may see once a year, if you see that a client is a good candidate for one of these structures, there's nothing wrong with saying, hey, I think you ought to take a look at this and talk it over with your tax person because I think there may be some savings there. Now, that's not giving tax advice. That's saying go get tax advice. You see the difference? It's saying, I think you may be able to benefit from something else. So understanding how these work and having a working knowledge of this is really super important and will benefit your practice daily, I think. It's kind of an overview. We are going to get into many different types of structures and entities, sole proprietorships all the way to C corporations. We're going to define what is a business entity versus a tax structure, and that's going to then segue into some details about what each of them are, what the kind of the pros and the cons are to them. And whenever you're done with this video, you will have a very good working knowledge of how all of this stuff works. And if you already know how it works, I think this is still going to be a nice recap of, okay, yeah, I've got my mind is straight on this. And given that it's January, we're almost to tax season, and having a little refresher on this will benefit anyone really. And there's Halon. He's over on the left. He, like myself, believes this slide is probably the most important slide I'll show you today. And it is defining the difference between a legal entity and a tax structure. And this is really, really, really important to get right. Over on the left are the legal entities. These are corporation, limited liability company, limited liability partnership, professional corporation. These are entities that are granted or managed by the states. They are a legal structure, a legal entity, meaning that they can take on several different kinds of tax structures depending on what your client decides they want it to be. A corporation, limited liability company, professional corporation, these are all granted by states, and they each have to pay like a state fee, and they basically are there to provide limited liability and a structure or a framework for the business to operate under. It has nothing to do with the IRS. The IRS is going to ask what kind of legal entity it is, but they do not care. The IRS structures are over on the right, the tax structures. Disregarded entity, S corporation, partnership, C corporation. Those are all tax structures. So to give you kind of an idea here, a corporation can be an S corporation or it can be a C corporation. A limited liability company can be an S corporation, a partnership, or a C corporation, or a disregarded entity. It can be any of those. So when you say to someone, Oh, I think you're an S corporation. You need to make sure that whenever you say that, you know you're trying to talk to them in tax terms, because that says nothing about what kind of legal entity they have. Just the same as when you ask a client, well, how are you taxed? And they say, well, we're an LLC. That tells you nothing about how they're taxed. You can assume that maybe the default, and we're going to go through some of this, what the default tax structures are when they're granted these legal entities, but just saying that you're a corporation, a professional corporation, a limited liability says nothing about how they're taxed. Just like telling someone what a tax structure is or how you're taxed says nothing about what kind of legal entity you are. That makes sense? The legal entities, to reinforce this, are granted by the states. And they are managed by the states. You have to pay a state fee. To set them up, you have to go to the state and say, I want to set this up. If you move, you need to probably move to that state and have the corporation either, or the limited liability, whatever you're operating, set up as a foreign corporation in a new state versus the state you're operating in. So here's kind of how this works. Let's say I set up my corporation originally in Missouri. And then I moved to Kansas, and I was no longer going to operate in Missouri. I'm going to operate in Kansas because it's a home-based business. My corporation has a couple of different options. One, it can remain set up in Missouri, and then it can register as a foreign corporation in Kansas. Now, why is it foreign? It's still in the U.S., right? Foreign means from a state perspective. So in Kansas, because you're a Missouri corporation, you're still a foreign corporation. However, you could shut down your Missouri corporation and start a new one in Kansas and set up a new Kansas one, and that would be a domestic corporation to Kansas. The problem with doing something like that is you end up having to set up new EINs. It's a whole new thing. The Missouri corporation had its own EIN and the Kansas one has its own. So a lot of times when people move, you see them setting up foreign corporations. But when someone says a foreign corporation, don't think they're talking about Taiwan or China. They may just be talking about a different state. The tax structures are completely managed by the IRS, and you can elect to be different things depending on how your legal entity is set up and how many shareholders or owners you have in it. We're going to get into all of that, but I think I've hammered this enough. We've been on this now for a few minutes, but legal entity versus tax structure, make sure you understand it. And in the conversation that we have after this, we can dive into more details about all of those. So let's start first with the simple one, the sole proprietorship, the sole proprietor. And, defining what a sole proprietor is, a business that legally has no separate existence from its owner. Okay, so it's important whenever someone's a sole proprietorship, they have no LLC, they have no corporation, they have no limited liability partnership or none of those fancy corporate structures. It is just them. Their business is no different from their person. It is them walking out their door every day and deciding to conduct business. Income and losses are all taxed on the individual income tax return. And one of the issues, about sole proprietorships, why does everyone start them? Okay, why do people decide to be sole proprietorships? Well, it's pretty easy. A sole proprietorship's owned and run by one person. They're easy to set up. You don't really have to set up anything. You don't have to file anything. You can walk out your door and start earning. The sole proprietor also, on the flip side, because it's easy, bears all of the risk. So all of your personal assets, everything that you own, your own credit score, all of that is at the mercy of your business because the business and you are one and the same. And on the tax side of things, sole proprietors, they file something called a Schedule C. I'm sure many of you are familiar with it. It's the disregarded entity form. It is the profit and loss of a sole proprietorship form. And they're super easy. They don't require a balance sheet. It's just income at the top and the expenses at the bottom. You still have to know some of the tax law. We're not going to try and get into all of that. But the main disadvantage to them is they are subject to self-employment tax. And that tax rate's 15.3% in addition to your regular income tax. Now, an LLC is different, and I'll tell you, people love some LLCs now, right? We see LLCs all over. And when you talk to someone or talk to a new business owner, the first thing they talk about is, I need to get myself an LLC. Somehow that LLC formation or structure, the business entity of it, has figured out a great marketing strategy. I don't know, maybe it just sounds better than like a corporation or other things. It's by definition a form of business organization with the liability-shield advantages of a corporation and the flexibility and tax savings of pass-throughs, kind of like a partnership. So the cool thing about LLCs are they are really, really flexible. And I will say that they tend to be my preferred entity for new business owners, especially because it allows them a huge amount of flexibility on how they're taxed later. But they're recognized in every state, have lots of benefits of a sole proprietorship and a corporation. Now, a limited liability company still has to do some corporate work, meaning having some meetings and doing some documentation, that kind of thing. It's not as much, I don't think, as a corporation does, but an LLC still has to do some of that. The beauty of LLCs and corporations is the liability protection. So whenever I walk out my door, when I'm operating as my LLC, my credit score, in most cases at least, my home, my personal assets, they are not at risk whenever I walk out there. And that's a really important point. If you're going out there and working, I don't care if you work in an office or if you're building skyscrapers, if you're going out there as a sole proprietor, you are risking everything that you and your family has every single day. To me, they're terrible. I think sole proprietorships, frankly, are obsolete. But at the end of the day, LLCs provide that wonderful liability protection, and that's what everybody wants. Now, LLCs are different from corporations, and there's a couple of reasons why. First is you can be a single-member LLC or a multi-member LLC. And a single-member LLC, its default tax status is as a disregarded entity, taxed like a sole proprietorship. And the income is subject to self-employment taxes. The LLC itself doesn't pay taxes. It is really just there. It acts and talks mostly like a sole proprietorship, except for the liability protection. Now, if you go over to a multi-member LLC, these are a little different. Multi-member means you've got more than one person owning it. And it is treated like a partnership. Still subject to the self-employment tax. Partnerships and sole proprietorships are very similar in many ways, especially in how they're taxed. It just depends on whether you're one person or whether you're many people. But in each case, the LLC, whether you're a single member or a multi-member LLC, can elect to be an S corporation to avoid some of that self-employment tax if the setup works out where their reasonable compensation is below what their total earnings. And we'll get into some of that when we get into the S corp tax structure side of things. But the LLC, super flexible. So have that in your mind. LLC, very flexible. Then there is the C corporation. And the C corporation really, I don't like to just call it a C corporation. From a business entity perspective, it's really just a corporation. And a corporation is everything that we're talking about that's a little different from an LLC, in that the corporation's been around for maybe 150, 300 years, somewhere in there, depending on who you talk to. Some would say the East India Company was the first corporation. Some would say that the true corporations didn't start until the 1800s. But either way, there's a massive amount of law that oversees corporations. And corporations, especially then if you're setting up a corporation and having it taxed as a C corporation, it is a totally separate entity. So it is separate from its owners. There is, depending on how you're taxed, if you're taxed as a C corporation, there's no flow through with it. And C corporations are probably best in most cases for those who are planning on either going public or taking on foreign investors or doing something with the corporation that's going to be really big and require it to have certain attributes that other small business setups don't allow for. Now, as we talk about C corporations, the big drawback to a C corporation, and when I say C corporation, that's really starting to get into a tax structure. It is the double taxation side of it. So taxes are paid at the corporate level first, and then at the shareholder level because of dividends tax. So they're required to file separate tax forms, as are other tax structures we're going to get into. But the big drawback to them is this double taxation piece, and they're getting a lot of play right now because of the new 21% tax rate that C corporations have. But as I'm going to show you in a slide later on, I still think that it's not a great setup for small business owners, and I'm going to compare all of these tax structures side by side in a slide towards the end. Now, as we start to get into partnership here, we're clearly making the transition from legal entities into tax structures. Okay, so we're going to get into partnership. We're going to get into S corporation here, and this is talking about the tax side of things. Even though a partnership is a type of legal structure too, and I'm gonna try, or legal entity, I should say. So I'm gonna try and kind of go down the path together here. A partnership, by definition, legal form of business operation between two or more individuals. Now, what happens is sometimes people don't understand how a partnership can get automatically created. So let's say you've got a sole proprietorship, and they decide to take on a business partner, but do not set up an LLC or corporation or anything like that. They just have a second person come in as an owner. By law and by definition, you've created a partnership. So the partnership can be automatically created by just running a business with more than one owner. You do not have to go out into the world and say, we declare ourselves a partnership. You can't be a multi-member sole proprietorship. So partnerships are created anytime two people come together and own a business together, regardless of if they set up a legal entity or not. The partnership has really two kinds of setups. One is general and one is a limited partnership. In a general partnership, all the partners manage the company together. So it's kind of the idea where you've got two partners, they both work in it. That's called a general partnership. A limited partnership is when you maybe have one or two people working in it, but then maybe you've got several other owners that don't. They're just there to put in money. They don't really show up every day. They don't really have anything to do with it. They just own it. And limited partnerships are a little bit tricky in that they have different kinds of income that flow around. So if you have limited partnerships where you've got some people that are a partnership inside that are doing the work and some that aren't, it's really important to do a little bit more research on what goes on tax-wise with limited partnerships, because some of those limited partners probably are impacted in a different way by how the books are done and how the financials are done versus the way that the general partners are impacted. So if you've got those, it's worth diving into. Maybe we can jump into some conversation about those in the Facebook group after we're done with our presentation here today. Partnerships still are kind of taxed like sole proprietorships in that there's no taxation at the partnership level. There's self-employment tax still. It is a pass-through entity, so it's better than a C corporation in that you don't have to pay dual taxes, one at the entity level and one at the shareholder level. But I don't think partnerships are a great setup unless you've got a reason to be a partnership. Okay? So sometimes reasons to be a partnership include you have limited partners. Sometimes it includes that you own real estate. Sometimes it includes that you've got foreign individuals that own it. Maybe you have corporations that own it. So usually I pick a partnership if I have a reason to. There's a reason that stands out why partnership is better. Otherwise, I'm moving much more towards my favorite entity, which is the S corporation. And if you have clients that make under $1 million, S corporation has to be something that you understand, because for small business, S corporations provide many, many benefits. And as we get into this here, let's just jump into the definition real quick. Again, this is a tax structure, not a legal entity. So it's not really good form to say, hey, someone is an S corporation. It's better form to say they're an LLC taxed as an S corporation, or they are a corporation taxed as an S corporation, or they are an LLC taxed as a sole proprietorship. See what I mean? That is the best nomenclature for describing, legal entity and tax structure. S corporations are limited liability companies, so you can be an LLC or a corporation and elect S corporation tax status. And they elect, S stands for small, so they kind of elect to be a small corporation status, and this allows for it to look like a corporation. The 1120S is what it files on, so it's kind of a derivative of the 1120, which is the C Corp form, but they get still pass-through treatment, meaning they don't have to pay taxes at the corporate level. And S Corps, they are easy to run. They do file on a separate form, so do partnerships, so do C corporations. The only type of entity that really gets to avoid the separate business tax return thing is a sole proprietorship. So you could be an LLC taxed as a sole proprietorship or a true sole proprietorship taxed as a disregarded entity. Individual shareholders, you can't have more than 100 of them, and that you got to watch your foreign investors. Now, you can have resident aliens be S corporation shareholders, but if someone is truly foreign, they don't live here, they live in India or Russia or Japan, they cannot be shareholders in an S corporation, which is why partnerships sometimes are better, or why C corporations are better. There are situations where that would be a better structure than S corporation. Shareholders have to be individuals. There are some exceptions. States can be shareholders and a few other types of things. But these kind of structures are really easy to set up. Let's say you set up an LLC or a corporation. You can immediately file what's called Form 2553, and that will convert your LLC or corporation to an S corporation. The S corporation avoids self-employment tax on the distributions from the company. Now, this is a huge kind of third rail of taxation because it's an area where we see a lot of abuse as well. What it means is everyone wants to get out of self-employment tax. Sometime I'll do another video just about self-employment tax and show you small business owners pay much more self-employment tax a lot of times than they do regular income tax. And so everyone's trying to get out of this thing. Self-employment tax is kind of like payroll taxes. Well, the way that S corporations work is you must run reasonable compensation, meaning you have to have the owners of the S corporation that are active in the S corporation be paid a salary, or else the IRS could say that the distributions from the corporation are going to be reclassified as salary. And see, when someone gets paid salary, they're paying self-employment tax on that salary in the form of FICA. So it is kind of one of these things where you get to decide for yourself how much tax you want to pay, unless the IRS audits you and you lose. So the good rule here is you need to make sure that if, let's say someone is a plumber and they make $100,000 a year, you need to go and look at what most plumbers make if they work for someone else and have that owner run that much salary on themselves so that they're not trying to avoid the self-employment tax and they're operating their S corp correctly. So let's say you went out, they make $100,000. Let's say that you went out and saw that most plumbers earn $60,000. Well, their salary would be $60,000 a year then, and they'd pay self-employment tax or FICA tax on that. But the other $40,000 that they make, they don't have to pay FICA tax on. So you can see where this saves quite a bit of money if you set it up right and set it up legally. At Halon, we have something called an officer's compensation matrix that helps us decide what an average amount should be for these salaries and these amounts. We have a whole process for it. So if you're interested in that, we can share that with you. S corporations have the same liability protection as other things. They have the same attributes of any pass-through, just much less self-employment tax as long as they're run correctly. Now, I will say this. Let's say that your plumber only made $60,000 a year, okay? And an average plumber is supposed to earn $60,000 a year. Well, then the S corporation probably doesn't work because they need to run that payroll even if they were an S corp. So maybe they should just be a disregarded entity and make their tax life a little simpler. Usually, and at least at Halon, we don't see that very often. We very rarely see business owners operating at or less than than what they could get paid out in as an employee. I mean, in a lot of ways, you ask yourself, what's the point of being a business owner if you can't really make more than what you made as an employee, because being an employee has many, many benefits that being a business owner doesn't. So usually we see that there's an opportunity for S corporations to save you money. Here's another chart that this is on our website at Halon too, if you ever want to take a look at it. This is comparing the 4 different kinds of tax. So sole proprietors on the left, and you can think of that as partnership too, because sole proprietorships and partnerships are taxed in a very similar way. Then we've got the S corporation, then we have the C corp, and then the C corp with no wages. And you can go through this on your own if you want to later on, but just go down to the bottom, the total tax. You can see that given the same variables, the same business, the S corporation is almost always the better tax situation, and by a considerable margin. I mean, it's $5,000 less than the sole proprietor, and this includes the new Section 199A tax deduction. It used to be an even wider gap, but with the new pass-through deduction that got passed last year, it's gotten a little closer between sole proprietorship and S corporation. I still think C corporation is still way out in the woods. I don't see any reason to be a C corporation unless you have special circumstances. So S corporation can really save folks money. Now, this has been a quick video about some of these topics. They really deserve much more time and much more attention. On our website at Halon, if you're interested, I have an ebook that you can download for free that's called Dangers of Sole Proprietorship. And this ebook is 20-some pages long and goes in depth as to what the problem is with with sole proprietorships, and goes into a little bit about S corporations, goes into all the entities really, but hammers home, especially for clients, all the dangers of operating as a sole proprietorship. This is on our website. It's on the homepage, so you can grab it if you like to. I also have another ebook that you may be interested in if you're helping clients convert to S corporation or trying to set up bookkeeping for S corporations. This goes through everything that's needed from the tax side, the bookkeeping side, the legal side, everything of converting something to an S corporation. Doesn't matter if it's a new business or not. This is on our website too. I'll drop the link below the video, but this is free, and you can just fill out the form and it instantly gets downloaded to you. And then before I wrap up, bookkeepers may give information regarding the tax implications of how a business is organized. It is very important we don't cross the line and start giving legal advice. And this is, we're showing this in a Facebook group. The Facebook groups are littered with lots of conversations about what is legal advice versus not. I usually try and explain it this way. I very rarely give anyone advice, if ever, advice about, hey, you should be a legal entity this or legal entity that. Because I don't really care what legal entity. They can be an LLC, they can be a corporation. They should go talk to their attorney. It's not really part of my world. What I do freely give advice on, and is just fine, is about the tax structures. So you can talk about S Corp, partnership, C Corporation, disregarded entity. Remember, all the way back to those tax structures, you can give all the advice on those that you want. So give that advice, keep it about tax structures, and say, set up whatever entity you want to, go talk to your attorney, but when that's done, we can talk about tax structures. We can help you with that. And if you don't want to help clients with that at Halon, we can help them make those decisions. That is all part of our service. So if you ever need that or want to talk to us about a client or something, please let us know. We'll jump into a conversation with you. So that is all that I've got for today. If you have any questions, we will start the conversation now inside the Facebook group. I hope you enjoyed the presentation. It's too short. I mean, again, these topics are pretty detailed if you really want to dive into them, but we can help with questions, and maybe in another Tax Tuesday, we'll take each one of them and kind of do a really deep dive into them and educate that way. So have a great day, have a great week, and I will talk to you soon.